Welcome back. Hope you're having a good morning. Well, let's get straight to the big deal that was announced overnight. Healthcare services provider Aster DM will sell its Gulf business for $1 billion. Fajr Capital, along with Aster DM's promoters, will acquire this business. To discuss more on this, as well as what's the way ahead, Dr. Azad Maupin, the chairman of Aster DM, joins us on the show. Hi, Dr. Morning. Thanks so much for joining in. Well, first, just explain to us the basic rationale of this particular deal.
So the rationale behind the deal is that these two geographies, GCC and India, we have found that this has got different dynamics in markets, and there is requirement to look at it in different ways. Everything, including the customers, the investors, everything, it's different. And we thought we have to have separation of this for realizing the value of both markets, and pure play on both sides is the best way we can go forward. And we also realized that after 5 years of listing in the market, that the India market doesn't give the same value that it gives to India for something which is outside of India, the state, India and all. So that's why we thought there is a requirement for us to segregate. And as soon as we decided that, we found a lot of interest for a pure play India, and people were very interested to look at it. So that's the reason why there has been a decision to go forward to segregate this into two realities.
If you could tell us, how did you arrive at the valuation of $1 billion?
So multiple things have been done. One, the first thing we did is we appointed investment bankers about 1 year back, both Moelis and Credit Suisse. They have gone around in the GCC as well as outside and found 42 people who were initially interested to look at, with whom the IM was shared, and then brought it down to 16, and then to 8, 4, and finally 2 of them were 4 of them were asked to give the non-binding bids, and from which again 2 were selected, and finally one of them was given the opportunity for giving a binding bid. So that's one way in which we finally got a value which out of large number of investors, people were ready to give. The second thing, we got a valuation done by 2 of the large firms, Big Four. One is EY, another one is PwC. So both have given the valuation. And the third is by getting a fairness opinion beyond that from one of the SEBI approved people, the ICICI Securities. So 3 methods were used to make sure that the value that we got from this bidder was really the value for the GCC business.
Okay, so this large chunk of money, right, over $1 billion that you've received for the sale of the Gulf business, how is the cash that you're going to get, how is it going to be utilized over the next, say, 12 to 18 months?
So we hope to utilize it in different ways. One is for the dividending out to a part of it. That's our desire, that board has to decide. I am telling as the chairman of the company, our desire is that it has to be, a large part has to be dividended out. People have been waiting patiently for 5 years ever since we got listed for a dividend. So we would like to, give them a good dividend. That's one of the desires, and the significant money is coming, and part of it can be dividended out. We will also keep part of it for growth capital for India. So the board has to now join and have another meeting in which they will have to look at how this money is to be utilized. And I, as the promoter as well as chairman, we will use all our influence to see that a large part of it comes out as dividend to the existing shareholders.
All right. So, Dr. Maupin, you're talking about growth capital as well as dividend. Tell us, how much will you reward your shareholders post this deal via dividend?
I won't be able to tell that because that's a board matter, and going into that, I am telling my desire, and I hope that so far, the the directors, independent directors who have been actually helping for running this, because there's a clear related party transaction here. We are on both sides. So I don't want to put ideas or words into their mouth and tell some percentages, something. But as I told you, my desire, our family's desire, is to see that a large dividend comes out of it. And there's another reason for that, apart from the desire to give a good dividend to our shareholders. It's also because even for us, largest shareholders, 42%, this money has to come back. Part of it we'll be utilizing for acquiring the stake in the GCC business. So we also have to get this money and utilize it there. So there is actually an intention in the minds of the promoters also for a dividend to come out.
I mean, is it possible you look at increasing your stake further in the India business, sir?
Yeah, if there is availability of resources, we have to now fund this GCC business, buying off the GCC business. But still, if there is opportunity, we definitely will look at that, because we are so committed to the India market. Because of one, it is India, and India is growing, and we are part of that. And second, we see huge opportunity for value realization as well as value increase in India.
All right. Finally, the capex plans, what would they be to grow the India business, considering the cash on books? What are any acquisition plans that you have in the Indian market?
So we already have a capex plan. We are increasing 1,500 to 1,600 beds in the next 2 to 3 years, for which it's all internal accruals which shall be used for that, along with some leverage from the bank. We are very under-leveraged. See, one of the benefits which is coming by this whole transaction is that the balance sheet, it gets much better, because the debt which was sitting was in GCC and it is completely wiped out. And what money is coming out, what you see as the 1 billion, around 1 billion valuation, is without any debt. That money comes in. So, and the balance sheet is wiped out of all the GCC debt. India debt is very limited, and it is as low as 1 year EBITDA for us. So we can leverage the balance sheet and get some funding for that. So it's not an issue for the planned capex for the next 3 to 5 years. What is required if we are going for a large acquisition? We will have to have funding. So 2 ways. One, definitely the money which is coming in, part of it can be utilized for that. And more importantly, we are also looking at partners who can join us in this journey forward in India, and we'll be happy to consider that. But not at this point. At this point, we are focusing on our transaction going through. Now we have to get the approval from the shareholders. That's the most important next task. So one thing at a time, we will get that done. And once it is segregated, we will definitely look at our ways in which even getting somebody as a partner as we go forward in India.
Okay, let's take a short break on that note. Thank you so much, sir, for joining us. And, once again, congratulations on the sale of your Gulf business. That, of course, will be one of the big stocks in focus today. But when we come back, the market is also in focus as we are on the road to new highs. Anuj will be joining in for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. Stay tuned.